Well, thanks so much for tuning into the trade setup right here on BloombergQuint Live. I'm Neeraj Shah, and unfortunately, it's not a very pretty picture. First, the key newsmakers, well, actually, in the markets remain the key newsmaker. So the Nasdaq futures, after correcting intraday yesterday, they were in the green when everybody presumably went to sleep, and then we've had a bit of a red, but they've fallen further. And Netflix post its numbers has been roiled in aftermarket trade in the US. Russia has proposed banning crypto mining and trading. That could be interesting. One of the largest countries with the, as in one of the countries with the largest set of miners after China, and Russia is now proposing these. Let's wait and watch if it has any impact on crypto. And interestingly, while Hong Kong is doing what it is doing on the zero COVID policy, or Western Australia is rethinking its opening up, Thailand yet joins yet another country which is planning to welcome back tourists without the need to quarantine. So we've heard from UK earlier this week. Now Thailand is proposing to do the same. But quite interesting. Well, actually not the same, but yeah, planning to at least welcome back tourists without the need to quarantine. So, well, fairly interesting developments happening on the COVID front across the world. But in terms of markets, it's not looking good. It's red across the screen. So the US screen, if you just look at the intraday, it will show you the thing that I'm trying to tell you about. It cracked and cracked very, very viciously. The US markets did, after being in the green for better part of the trading session. For the better part of the trading session yesterday, you could argue that that was the right statement. And as I said, if you look at the futures, the Nasdaq futures have gotten roiled further. There is a bit of a pressure after market as well, 110 or 120 odd points in the red for the Nasdaq futures. Now, can these bounce back? Maybe they could, but for now, the futures market don't look as good. Asia is in the red as well, as you can see. Nikkei, Hang Seng, CSI, almost every index, every major index is trading with a bit of a red. And the SGX Nifty will come up on your screen next. And while it was up about 60 odd points at 10:30 last night, it's now down about 116 odd points. So certainly a bit of a correction. The point is, and the trade setup comes up next. The point is, does this now make the risk reward favorable? I think not. I still think that the risk reward is not in favor of contrarian buying. There's still some way to go. The quant indicators as well don't quite indicate that there is buying likely to emerge at the current levels. Heavy selling in IT yesterday, in particularly TCS, very large blocks there. But that aside, some of the other counters too saw some selling. And while I was of the opinion yesterday that there will be some bottom fishing, but clearly it's not working. So I was wrong there. I thought really on the basis of my conversations and the kind of falls that have happened that IT might see buying if one more day of selling happens. But unfortunately, it doesn't seem like it will necessarily happen today. Though I do think that if there is a strong pack out there where people might want to come and buy despite the valuations, you have to agree that IT features right at the top of the list. So let's wait and watch if that comes in sooner rather than later. But clearly, while I thought it would happen if there was one more day of correction, the day of correction has happened, but you don't quite know if it will happen today. Maybe second half, but let's wait and watch. For now, there seems to be selling, and that could be some selling despite some fairly strong numbers today at the mid-cap end of the market, which I'll bring to you in a moment. Flows, and this is the problem. While the DI flows remain strong, and you see those 11,000 crores of SIP flows, etc., coming in, the quantum of FI selling is just enormous. 4,679 crores was the single day selling from the FIs. I think in the last 7 or 8 trading sessions, we've probably seen $2 billion worth of selling happen. This comes on the back of heavy selling in the months of October, November, and December. So January continues, and this time around, FIs would be sitting on a bit of gain versus the other markets, and on an absolute basis as well in India. There's certainly some heavy duty selling that's happening on the FI side. 4,680 is a very large number, you have to say, on a single day. What about today, though? What could happen? Well, we'll start off low. Yes, we know it's a results heavy day as well, because there are 5 nifty names really, including the biggie Reliance. But HDFC Life, sorry, 4 nifty names: HDFC Life, JSW Steel, Reliance, and SBI Life. And I think both SBI Life and JSW Steel will actually come out in the second half of the trading day today. And then, of course, we might have HDFC Life post-market hours, Reliance Industries certainly post-market hours. So some bit of action from Reliance's side on Monday morning can't be ruled out. The others, well, steady as she goes. Non-Nifty side, I think not too much. Watch out for Polycab, maybe the others. Okay, Bandhan, the asset quality will be watched out for. And on PVR, could they spring a surprise because of a bunch of releases like 83 and some others? Could that one have a good day in trade despite the market meltdown? Well, I think the numbers will decide that. If maybe the numbers will decide that. Now, on to stocks to be watched today. HUL, the numbers, and let's just first dissect the numbers. Revenues up 10%, 439 crores. Estimates were 13,010 crores. Net profit up about 19% at 2297. The expectations were 2227, and margins too improved versus the Bloomberg estimate. These are all versus the Bloomberg estimates, by the way, viewers. The point is, while these numbers look very good, and it seems that HUL has strengthened market share, if you will, the volume growth numbers left a bit to be desired, and therefore I'm not quite sure how HUL reacts today. In a bad market, defensives will likely do well, and HUL has reasons for that, but the volume growth numbers may be a chink in the armor. Let's wait and watch what happens there. Persistent, it was anticipated to be strong, and it has come strong. Revenues up 10%, which is really strong. This is top quartile, top percentile of performers really for Persistent Systems across all companies that have come out. You've seen some fairly strong numbers from Tata Elxsi, from Mphasis, from LTI, but Persistent right up there in terms of quarter-on-quarter growth. EBITDA up 11.9%, PAT up 9%, EBITDA margins up 23%. Very strong show. The only thing that doesn't work in its favor, that one, it was expected to do well, and two, attrition has really jumped up. LTM attrition is at 26%, and they've given ESOPs to 80% of the employee base, and yet attrition is so high. That is the problem area for Persistent, and something that I'll be asking Sandeep Kalra about. We have the interaction today. I think it airs at somewhere around 10 or 9:30 or thereabouts. But yeah, we'll be talking to him today to try and figure out, one, the growth patterns for 2022, but two, attrition, such a big problem for them. Mphasis, I'm getting you the Morgan Stanley view straight away because I thought it encompasses a lot of points. So without getting into the numbers nitty-gritty, but in the revenue growth was much better than anticipated. Margins, maybe not so, but Morgan Stanley puts it up well. Of course, they were overweight rating with the target price of 3,900, which is a good, I think 30% up from the current price. They're saying that 9% quarter-on-quarter direct channel growth, plus strong deal wins, plus stable margins equal to good quality results. Good quality results. Not only they have beaten estimates, but good quality results is what they are saying. The decline in the DXC channel was lower than expectations. The decline was 9.5% QOQ versus the Morgan Stanley estimate of 19.6%. So they've kind of done slightly well there too. New deal wins are at $335 million, significantly better than trends seen in the past few quarters. I think this is the good part to my mind, aside of the beat, etc. This is the good part for Mphasis in the current quarter numbers. The stock also has kind of stayed a bit soft compared to some of the others. So is there a case for the stock to do well? Maybe it could. What could act against it again? The margin performance, slightly ho-hum, and two, the fact that the markets are not looking as great. Tech is seeing some selling. You would want to ask that when there are some cheaper names available, do you want to go for an Mphasis? The argument could be that the likes of LTI, Persistent, Mphasis are consistently showing growth at the top end of the market, at the revenue end. So maybe the market wants to favor those. But all of these are not cheap stocks, so you have to keep that at the back of your mind. The only point that I was making, just look at it. The last few sessions in the month of January, Mphasis has had a very poor run. So maybe, just maybe, it could do okay. CYIENT, so good results optically, by the way. Dollar revenue growth at 5.2%, ahead of the 4% estimated. They've upped their FY22 margin guidance to 350 basis points expansion versus 250 to 300 basis points expansion. The services revenue guidance maintained at double digits. The only point is, at a point of time when every CEO is telling me that they want to invest in growth and not stabilize margins, CYIENT is doing the opposite, really. CYIENT is going and strengthening margins, very interestingly, and that's the point, that that revenue growth has not been all that impressive. But hey, I think there is a note from Morgan Stanley. Yeah, so they have an underweight rating because they're saying that the target, I mean, they've cut the target price to 900. They are saying that the revenue performance has lagged significantly versus most mid-cap peers, although the margin execution has been good. And they believe that until the growth gap on the revenue front narrows, valuation discount could remain deep. And remember, CYIENT is at a valuation discount. I think the Motilal Oswal note says the same thing, that it's available at a very good value. The valuations remain inexpensive, and their target price is 1310, which is an upside of 34%. So difficult to say which one this one react. I would suspect that the markets don't, I mean, the results beat means that it does well, but the growth numbers have not been as strong as some of the others. Look at that, emphasis persistent. Look at the growth numbers, dollar revenue growth versus what CYIENT is doing. HAVELLS, a mixed bag again. Revenue is up 15%, which is commendable, fairly strong revenue performance, but margins down, PAT down, 12% apiece. Margins at 12% versus 16%, which is quite a steep drop. And the OPM was impacted by elevated commodity costs, lag effect in taking price hikes, especially in the consumer durable space, and higher ad spends as well. Ad expenses have doubled to 100 crores versus 51 crores. So they've had to up the ad spends in order to up the revenue growth. But the margin profile isn't the strongest. They've not been able to take price hikes. So it's a mixed set of numbers. The question is, can they improve upon margins? Can the pressures move, become okay? Is the point. So that's the key thing to watch out for. Viewers, there are some queries around markets. I'll come to them at the end of the trade setup. Just hang on. Let me just finish the numbers first. Biocon, the numbers are disappointing. Revenues were up 17%, which is strong, but the margins have expanded, but not as strong. And EBITDA too at 25%, good, but slightly below estimates. This was anticipated. It's come in that fashion. Remember, there's the Morgan Stanley note, which is a tactical buy on Biocon, maybe anticipating something. So do watch out. Maybe there could be a bit of a correction. The question is, will that correction be bought into? Wait and watch. Adani Enterprises, it's a weak market, so I don't know how much does this IPO announcement do, but it's a 3,600 crore IPO open for subscription on Jan 27th. But the point is, they've also had to reduce the size of the IPO. Does it impact Adani Enterprises today positively or negatively remains to be seen. I would suspect in normal case, it should impact positively, but the market's not as strong. So therefore, it could be negative. Also keep in mind, Adani Enterprises has had a bit of a run in the last few sessions. So that might weigh against the stock. Future Retail, Bloomberg exclusive, that Future Retail is not in a position to make a payment of 3,500 crores of past due debt before the grace period expires on Jan 31st. Does it impact the Future Group stocks? Remains to be seen. Some other stocks in focus and mostly results based, but I'm just bringing a snapshot of some. Just keep an eye out on some of these. They could react. I don't have excessive analysis on each of these, but yeah, seems like Vimta Labs and Leica Labs have done okay. Shoppers Stop has probably done okay. The base effect also comes into play, of course, for all of these. Sasken has not done well and could likely react negatively. Dodla Dairy not done well, could likely react negatively. Concord pretty much in line. Hardly any surprises there. Even the LLF provision is in line with estimates. So maybe a no-show for a Concord. I mean, no big surprise, positive or negative. So remains to be seen. But the others, just keep an eye out. They could have a bit of a reaction based on the numbers. Largely, the scene doesn't seem to be as good. I'm sure a bunch of you must be thinking whether it's a good time to deploy some part of your gunpowder. Now, if 2021 template is to be believed, yes, it makes sense to do so. Is 2022 different or likely to be different? Yes, because we have Fed rate hikes and we know that they're going to happen. So what kind of an impact that those could have, I think it's a bit of a difficult point to ponder. So in companies which are looking great on a bottom-up basis, wherein earnings growth seems to be solid, maybe deploy capital there. Nifty futures might not necessarily be the best idea, I would suspect. I do think, though, and purely based on the timing performance, and again, nobody can time the markets well. So I might be cutting a sorry figure tomorrow or on Monday, but I do still think that the risk reward is not in favor of leverage longs right now. So be careful on the trading capital front. On the investment capital, if you really believe in a good story, you can do well. Sugar stocks have done well despite all the mayhem in the markets, right? They are trading at 52-week highs. So in a good bottom-up story, sure. But be careful. The risk reward on leverage longs is not necessarily in favor right now. So you've got to be mindful of that. Reliance Industries and ICICI Bank both come out with numbers post-market hours today, and that could have a bit of a bearing on Monday morning's trade as well. So be mindful of that too. Thanks so much for tuning in today, viewers. Have a safe, profitable day ahead. And if you're stepping out, please stay master.